Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also, subscribe to our channel, click on the bell button and choose all notifications to receive important financial updates from our channel at the earliest. Now, in this video, we will talk about 7 stock ideas from Kotak Securities and Sharekhan, which may double your money over the next 3 years. Also friends, if you are benefited by the content on our channel, please don't forget to share these videos as it motivates us to go ahead and keep making these videos. Please watch this video to know more. Now the first stock suggested by Kotak Securities is Tata Motors Limited, which is available at 330.80 and the face value here is 2. The symbol for this company is TATAMOTORS. Now Tata Motors Limited is an automobile company. The company is engaged in the manufacture of motor vehicles and is engaged primarily in the business of automobile products consisting of all types of commercial and passenger vehicles, including financing of the vehicles sold by the company. The company's segments include automotive operations and all other operations. The market cap of the company is 95,513.49 crores, which means the company is a large cap one. The EPS is 32.86, translating into a price to earnings ratio of 10.07, which is much cheaper compared to the industry PE of 42.63. The book value is 170.9825, which translates into a reasonable price to book ratio of 1.9347. The company did not pay out any dividends and the promoter holding is below average at 42.86. Now friends, this company is from the Tata group of companies, and with the recent change of Chandra taking over, this company has a bright future ahead. Now Kotak Securities states that as forex hedges reduce, this company can potentially double its net profit between FY18 to 20. As the numbers improve in the future, the stock should deliver good returns. The second stock on the list is UPL Limited, which is available at 735.25 and the face value for it is 2. The symbol for it is UPL. Now UPL Limited provides crop protection solutions. The company is engaged in the business of agrochemicals, industrial chemicals, chemical intermediates and specialty chemicals. The company's segments include agro activity and non-agro activity. The agro activity segments includes the manufacture and marketing of conventional agrochemical products such as seeds and other agricultural related products. The non-agro activity segment includes manufacture and marketing of industrial chemical and other non-agricultural related products. Now, as is evident from the 1-year chart, this company has been on a consistent downtrend. The market cap of the company is 37,449.42 crores, which means that the company is a large cap one. EPS is 39.80, translating into a reasonable price to earnings ratio of 18.51 when compared with the industry PE of 41.15. The book value is 179.785, which translates into a price to book ratio of 4.0896. The debt to equity is 0.7920, whereas the return on equity is 0.2451 and is a good number. The company's dividend yield stands at 0.95, whereas the promoter holding is below average at 30.36. Now Kotak Securities says that the company has the potential to grow earnings at a CAGR of 17 to 18% over the next 3 years. It is the best play in the agrochemical space and this company deserves to trade at higher multiples than the sectoral average. At 20 times forward earnings and assuming earnings growth at 18% CAGR, the stock can double in the next 3 years. Now the third company on the list is Federal Bank Limited, which is available at 90.05 and the face value for this company is 2.00. The symbol for it is FEDERALBNK. Now the Federal Bank Limited is a banking company and it operates through 4 segments: treasury, corporate or wholesale banking, retail banking and other banking operations. Now the 1-year chart would reveal that after consolidating for the first few months of the year, the company has been on a downtrend. The market cap of the company is 17,765.21 crores, which means that the company is a mid-cap one. The EPS is 4.45, translating into a price to earnings ratio of 20.24, which is lower than the industry standard of 31.81. The book value for the company is 45.58, translating into a price to book ratio of 1.98. The dividend yield provided by the company is 1%. Now friends, this company has reported poor earnings recently, and in the earnings conference call, Rakesh Jhunjhunwala grilled the senior management. Now Kotak Securities feels that once the NPA issues get resolved, this bank is expected to report earnings growth at a CAGR of 25% over the next 2 to 3 years. The stock trades cheap at around 1.1 times FY20 estimated book value. At its peak, the stock traded at 2 times forward price to book value. Better valuation and a rise in earnings could provide the necessary push for the stock to double over the next 3 years. Now the final stock by Kotak Securities is Jindal Stainless Hisar Limited, which is available at 173.90, and the face value here is 2. The symbol for it is JSLHISAR. Now Jindal Stainless Hisar Limited is an India-based manufacturer of stainless steel. The company is a producer of stainless steel strips for razor blades and coin blanks. The company's specialty products division caters to the precision and specialty stainless steel requirements of Indian and international customers. Now the one-year chart would reveal the company started on an uptrend for the initial part of the year, but since then has largely been on a downtrend. The market cap of the company is 4,102.90 crores, which means that the company is a mid-cap one. The EPS is 16.77, translating into a price to earnings ratio of 10.37, which is below the industry PE of 12.84. The book value is 53.31, translating into a price to book ratio of 3.26, which is still reasonable. The company did not pay out any dividends, and the promoter holding is above average at 55.17. Now friends, after GST rollout and imposition of 18.95% countervailing duty on Chinese import, Kotak expects Jindal Stainless Hisar to garner higher market share in the coming years. Now moving on with the list of stocks recommended by Sharekhan. The first stock on the list is Jubilant Foodworks Limited, which is available at 2477.85, and the face value for this stock is 10. The symbol for it is JUBLFOOD. Now Jubilant Foodworks Limited is a food service company. The company operates through the food and beverages segment. The company and its subsidiaries have the rights to develop and operate Domino's Pizza brand in India, Sri Lanka, Bangladesh and Nepal. It operates in India and Sri Lanka. It has a right for developing and operating Dunkin's Donuts restaurants for India. Now the one-year chart would reveal that this company has been on a consistently beautiful uptrend. The market cap of the company is 16,349.97 crores, which translates into a mid-cap market capitalization. The EPS is 31.28, which translates into a very expensive price to earnings ratio of 79.22. Now this is also expensive when compared with the industry PE of 62.74. The book value is 160.44, translating into a price to book ratio of 15.44. The company is debt free, and hence the debt to equity is 0, whereas the return on equity is 0.4109. The dividend yield is 0.10, and the promoter holding is below average at 44.94. Now friends, recently this company announced blowout numbers, and the same store sales growth was a number which surprised everybody. Now Kotak Securities believes that the company should be one of the key beneficiaries of the improvement in the consumer discretionary environment in the domestic market. Now Jubilant Foodworks management is confident of maintaining the double-digit same-store sales growth on the back of sustained focus on product innovation and digitization. Further reduction of losses in Dunkin' Donuts and sustained operating efficiencies will drive its profitabilities going forward. Now the next stock on the list is Sundaram Fasteners Limited, which is available at 581.30, and the face value of it is 1. Now Sundaram Fasteners Limited is a holding company. The company is engaged in manufacturing high tensile fasteners and motor vehicle parts and accessories. Now as is evident from the one-year chart, the company has been a wealth creator and has been on an uptrend. The market cap of the company is 12,221.07 crores, which means that the company is a mid-cap one. The EPS is 17.49, which translates into a price to earnings ratio of 33.25, which is largely in line with the industry PE of 31.64. The book value is 79.98, which translates into an expensive price to book ratio of 7.27. The dividend yield is 0.77, whereas the promoter holding is just about average at 49.53. Now, Sundaram Fasteners recently gained foothold to the fast emerging electric vehicle space with orders from Tesla. With the introduction of high margin value added products and improvement in subsidiary performance, Sharekhan expects SFL to outgrow the industry with a strong 16% earnings CAGR over FY 2018 to FY 2020. Now, the final company on the list is Bajaj Finserv Limited, which is available at 5345.45, and the symbol for it is BAJAJFINSV. The face value for this stock is 5. Now, Bajaj Finserv Limited is a holding company for various financial services businesses. The company is engaged in the business of promoting financial services such as finance, insurance, and wealth management through its investment in subsidiaries and joint ventures. Now, if you were to look at the 1-year chart, you would see the company had a spike for the initial part of the year, but since then has largely been consolidating. The market cap of the company is 85,064.87 crores, which means that the company is a large cap one. The EPS is 162.81, which translates into a price to earnings ratio of 32.83, which is much cheaper compared to the industry PE of 38.51. The book value is 994.7058, which translates into a price to book ratio of 5.3739. The dividend yield is on the lower side at 0.03, whereas the promoter holding is above average at 58.35. Now, Sharekhan believes that the company is an attractive play on our long-term structural theme of financialization of savings in the economy. It is the holding company for Bajaj Group's life insurance and lending businesses, and this is the leader in its segment and has revolutionized the retail lending business in India, whereas the life insurance segment is progressing well to emerge out of the investment phase and has already become an industry-leading player. Both businesses have excellent operating metrics in their respective segments and are likely to continue the growth trend going forward. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. Always consult your financial advisor prior to acting on any of the information that you ever see on this channel. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.